Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for our free reports that get directly mailed to your inbox. Today's overlooked income pick, Global Medical REIT Inc., traded on New York Stock Exchange under symbol GMRE, has everything going for it. It has a growing high-yield dividend. It reported strong financial results. It strengthened its balance sheet. And if Wall Street analysts had their way, bullish GMRE stock would rally an additional 30% over the coming 12 months. John?
Thanks, Mo. The company's name pretty well sums up and gives away what it does. Global Medical REIT is a medical office real estate investment trust that owns and acquires healthcare facilities. It then leases those facilities to leading physician groups and regional and national not-for-profit and for-profit healthcare systems. Its current portfolio includes 188 buildings, 274 tenants with an occupancy rate of 97%, and annualized base rent of $111.3 million. Now, the net leasable area covers 4.9 million square feet, which, to put into context, is equivalent of 85 NFL fields. Properties come with a weighted average of 2.1% in rent escalations, with an average weighted term lease of 6 years. Now, it has a proven acquisition performance since it IPO'd in June 2016. Since then, its gross real estate assets have grown from 94 million to 1.48 billion today, and that helped it expand at a compound annual growth rate of 41%.
And I know some healthcare facilities were hit really hard during the pandemic. How is Global Medical REIT doing?
It continues to do well. For the second quarter, Global Medical announced that net income increased to 11.8 million or 18 cents per share, up significantly from 2.2 million or 3 cents per share in the same period last year. Funds from operations came in at 14.7 million or 21 cents per unit, and that compares to 16.4 million or 24 cents per unit in the comparable prior year period. Now, adjusted funds from operations, meanwhile, were 15.9 million or 23 cents per unit versus 17.6 million or 25 per unit in the comparable year period. Second quarter revenue actually increased around 8% year over year to 36.4 million. The gains were primarily fueled by the company's acquisition activity and the performance of its portfolio. To that end, in April, it completed the acquisition of 2 medical office buildings in Redding, California for 6.7 million. In June, it sold a portfolio of 4 medical offices in Oklahoma City, Oklahoma, which resulted in a gain of 12.8 million. It maintained, as I said earlier, a portfolio lease occupancy rate of 97%, and it has used some of those funds from the acquisitions to pay down the balance of its variable debt, resulting in a leverage ratio of 44.5%.
How are the dividends here?
Well, thanks to a stable cash flow with 97% portfolio occupancy, Global Medical REIT has been able to provide investors with a reliable growing dividend. In fact, it's because of the company's strong tenant base that it did not reduce its payout during the pandemic, but it has raised it twice since then. At the start of 2021, it raised its quarterly distribution from 20 cents per unit to 20.5 cents per unit. And in the first quarter of 2022, it raised it again to 21 cents per unit, and it has held it there since then. Most recently, on June 9th, the board declared a cash dividend of 21 cents per unit, or 84 cents on an annual basis, for a yield of 8.99%, and that's almost triple the current inflation rate of 3.1%.
Now let's talk about GMRE stock. It's up 7% this year, but still has 30% upside potential.
Global Medical REIT stock was trading at record levels when the pandemic kicked the economy over the cliff. Like the broader market, global medical units took a big hit. Though GMRE units still managed to recover fairly quickly, by June 2021, global medical stock was again trading at record levels, and it continued to trade higher over the coming quarters. Familiar story, in January 2022, it hit a record high, but it couldn't sustain that momentum. This had nothing to do with what was going on at Global Medical. It was rising interest rates, inflations, and fears of a recession that sent the entire broader market lower. Both have since recovered. In 2023, global medical units are currently up 19% over the last 3 months and 7% year to date. Big moves, but additional gains are expected, with even conservative Wall Street analysts providing a 12-month share price target of $10.94 to $12.50 per unit.
John, thank you so much for your analysis. Just to recap, Global Medical REIT Inc. was a great company before pandemic and continues to be one now. It is expanding its portfolio, has built-in rent escalation, is reporting solid financial results, has strengthened its balance sheet, and rewards buy and hold investors with reliable high yield dividend. Because of industry dynamics, the outlook for global medical REITs remain robust. A whopping 90% of Americans age 50 years of age and older want to age in place, while 65% of seniors between the ages of 60 and 70 find it very easy to live independently. With more and more Americans choosing to age in place, demand for global medical's conveniently located healthcare facilities will continue to rise. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.